We'll go in there, taking a look at how Trump's inauguration has been reported in the press. Well, global markets, meanwhile, were volatile while the dollar rebounded on Tuesday in a choppy trading in the first hours after Donald Trump's new presidency began, notably after he announced plans for trade tariffs on neighbouring countries. Well, we can speak now to Chief Market Analyst at GTC, Jameel Ahmad, to find out a bit more. Jameel, how are markets reacting to Trump's inauguration, being sworn in once again?
Well, it was quiet at one point and it was cautious, but then it became a lot more choppy. We had to take into account that last week was a very good week for US financial markets. It's the best week of 2025, and in fact, the best week since Trump won the election in November. However, as the hours passed following the inauguration, there were comments made regarding the threat of tariffs by February 1st on the likes of Mexico and Canada, and this got investors a lot more, I would say, awake. We now have to see whether those tariffs come into play, but with trade wars and so forth being such a prominent theme of the first presidency, and we're not expecting much more now that to have changed, that's why investors are going to be reacting more sensitively to news flow, and this type of tariff news and so forth is going to be playing a very influential role on the traders' radars moving forward.
Now, I imagine, Jameel, investors play a longer-term game. They'll be looking further ahead, maybe to the first 100 days of Trump's time in office. What kind of trends might they be keeping an eye on?
Exactly. Attention does turn now towards the first 100 days, and we're going to be looking for trends like more strength in the US dollar potentially. I know the US dollar has already strengthened from 102 to 110, which is a significant move within the 2.5 months since he won the election. But the main name of the game is going to be trade tariffs, because those trade tariffs is not just the impacts it might have on inflation, which actually I think is going to be overplayed. You have to consider that if the US economy starts placing tariffs on other countries' goods, which appears to be the case, those tariffs get passed on to consumers. And everyday consumers in the United States actually contributes to the highest amount of US GDP. So there's more of a direct macroeconomic threat, whereas all the news flow seems to be circulated around the central bank policy impact, which I don't see being that big of a deal at all. But it might be a big deal to those data such as retail sales and consumer spending, and that economic growth, because of it being the largest contributor of GDP, that is something that you do need to watch.
Finally, Jameel, is it all about Trump, or is there other key economic data that we should keep an eye on this week?
Yeah, now the inauguration has passed, we should be monitoring what economic data there is coming out. And today, this morning, in fact, we've got the UK monthly jobs report. That is going to be key, leading into the Bank of England, as well as UK economic data overall. We also have the German zoo economic sentiment report scheduled in a couple of hours from now. That is particularly important because data last week showed that the German economy contracted in 2024, as well as 2023, which we knew about before. So the German economy, which is the major economy in Europe, has contracted for 2 years in a row. We see if this economic sentiment suggests whether 2025 might start off a bit more positive.
Okay, Jameel, for now, thanks very much indeed, Jameel.